If you still have FEGLI, the federal government's life insurance program, your premiums, the amount you pay every single month or pay period, can go to just a little bit every pay period to thousands and thousands of dollars every single year. And this can happen before retirement and especially in retirement. We see it to go as high as 7 times the price that you're used to paying, depending on which coverage you have. And that's not 7% higher, that is 70 or 7 times, meaning 700% higher. Huge price increases as you age. So today's video, we'll talk you through, okay, exactly when do these price increases happen? How can you make sure you avoid them, but make sure at the same time you have the coverage you need to stay protected and to make sure your family is protected as well. Now, if you're new to the channel, welcome. My name is Dallin Haas. I'm a financial planner. I serve federal employees that are retiring or retired every single day, and I absolutely love it. So let's talk about this topic here. The first thing we have to ask before we get into, and we will, by the way, we'll get into the different pieces of FEGLI so you know exactly what you have right now and what it's going to do premium-wise over the course of your career and retirement. But the first question you have to ask yourself before you get into any of these details is, do you need life insurance? Do you need life insurance? If you don't need life insurance, then I don't care how good of a deal on life insurance you have, it's probably not a good deal for you because you don't need it. But if you need life insurance, then the next question is, where is the best place to get it? And it may be the government's program, it may not. So with that in mind, with that context, let's talk about the government's program. There's different parts to it. Again, we're talking about FEGLI, Federal Employee Group Life Insurance. And if you're not familiar with what parts of FEGLI you have currently, that's the first thing to check. Look at, let's say, your pay stub, your leave and earn statement, or you can go normally online through your HR, whatever, right? Every agency has a slightly different system, and check which FEGLI you have. So let's start. FEGLI has 4 different parts. We have Basic, A, B, and C. Let's start with Basic. Basic covers basically your base salary worth of coverage. So if your base salary is $100K, if you pass away, your basic would cover $100K, more or less. Okay? It changed a little bit, but it's about that. Okay, it's about that. And the premiums do not go up as you age. They do not. So a 25-year-old is going to pay the same premium rate as a 65-year-old. That's just how the basic works. However, it does go up as your pay increases because the coverage amount, or basically what pays out for basic, goes up with your pay. Again, it's based on your basic pay. If your base pay is $200,000, if you passed away, you'd get paid out $200,000. If your base pays $50,000, you'd get paid out $50,000. Your family would get paid out $50,000. So your rates do go up with your pay because it's more coverage, but it doesn't go up with your age. However, if you choose to keep this coverage just as is, no reduction. So if you just want to keep this as is throughout your retirement, it can go up to as much as 7 times, like I mentioned earlier, 7 times the price to keep it as is in retirement. And there's much better options, which we'll talk about later. But first, let me talk about these other FEGLI options here. Okay. Next, Option A. Option A really normally isn't much of a big deal either way because it's only $10,000 worth of coverage. That's all you can get Option A for, and it does go up as you age. The premiums do as you age, but again, the coverage amount is so small, it's not normally that much money. So if you want this extra, great. If you don't, great. Again, it normally isn't a huge difference either way. And to even have Option A, you have to have Basic. So some people say, hey, maybe I just want only Option A, just have a little bit of coverage to bury me. But again, that's not an option. You have to have Basic, and then you can have Option A if you want. Now, what about B? Part B is where the vast majority of federal employees get killed in premiums. And let me tell you why. Part B is the one where you can do up to 5 times your salary worth of coverage. So if your salary is $100,000, you can do up to $500,000 worth of coverage, roughly. And because you can get a lot of coverage, the price can go up significantly. And The price goes up significantly as you age. Let me actually share this with you. This is the premium chart for FEGLI Part B. It's based on your age. As you see, if you're under 35, basically this is how much you'd pay per $1,000 worth of coverage. Okay? But let's just focus on the increases. As you see, when you're relatively young, the prices don't change all that much. But once you hit 50, it almost doubles. You hit 55, it almost doubles again. It more than doubles at 60. A big jump here basically doubles. I mean, the prices as you go 50 plus start getting crazy. I've seen so many federal employees look down at their pay stub after not really paying attention for a time. They start getting within these ages, 50 to 60, and they realize they're paying thousands of extra dollars in premiums that they really just hadn't paid attention to. So as you're approaching these ages, take a look at your pay stub. Do you have FEGLI Part B? How much coverage do you have? Is it still worth it for you? Do you need the coverage, or are there better options elsewhere? Now, let me address this actually right now. You may be looking at your pay stub and say, wow, I'm paying a bunch in FEGLI, but should I cancel it? And the short answer is I don't know. I'm definitely not saying you should just randomly cancel your FEGLI because it's expensive, because maybe it's the best you can do. And here's a general rule of thumb. One of the biggest advantages of FEGLI, of this government program, is generally you don't have to have a medical exam, right? When you're first hired, you can just elect how much coverage you want, and there's no medical exam. So if you have health issues in the private sector, you may not be able to get any coverage at all. So having this FEGLI, even if it does go up in price significantly over time, may be a great option, because maybe you need some life insurance. So if you're looking at your prices and saying, wow, that's a lot of money, the question is, first, do you need life insurance? And if so, can you get it at a better price? Can you go shop around? And there's lots of places online. There's tons of insurance companies out there that you can shop around at. But those are the questions to answer. Just know FEGLI Part B gets exceptionally expensive as you age. Okay? Now, what about option C? Option C is family coverage, which basically means if either your kids or your spouse passes away, you would get paid out some money, but you can't get that much coverage. So your spouse could only get up to $25,000 worth of coverage. On each child, you can get basically $12,500. So it's not a ton of coverage, and it does go up as you age, the price, but again, it's not a ton of coverage. So most people, it's just not that big of a deal. And honestly, most people don't keep this into retirement, because by the time retirement hits, their kids are normally grown, so not eligible anymore. And again, normally it's just not a ton of coverage, so it's not worth keeping deep into retirement. All right. So here's my summary. Option A, really small, not that big of a deal either way. Now, one thing I will say actually for option A is if you keep it 65 plus, it actually becomes free. It becomes free. The premiums go away 65 plus, but the coverage does drop down from $10,000 to $2,500. So if you've had option A all the way up to this point, wherever you're at in your career, if you're close to 65, it may be worth just kind of keeping 65 plus, because in retirement, it becomes free and it's $2,500 worth of coverage, which again is not a ton of coverage, but if you paid for it in this entire way and you just got a little bit more to go, maybe it's worth just keeping. Option B is exceptionally expensive, and if you try to keep it into retirement, again, stays exceptionally expensive, and it goes up every 5-year increment. So most people, if they're trying to cut coverage, this is one of the first ones to go, because it's very expensive. It's very expensive. Again, option C, not a ton of coverage, and most people in retirement just don't keep it. Now, let me explain what most people actually do in retirement. Most people keep basic. Most people keep basic, and let me explain why. You may ask, well, I thought it went 7 times higher, 700% increase in premiums in retirement. And yes, that's true if you don't make any changes to it going into retirement. However, there's different options in retirement. When you retire from basic, you've got a few different options, all right? Number one, if you do what they call no reduction. Now, by the way, these options, you don't make these choices until you're filling out the retirement application. That's when you make these choices. So if you're still working, you don't have to worry about these choices unless, of course, you want to cut some of this coverage. Then you can cut it now. But when it comes to what to do with basic, again, that happens at retirement. You can cut it before retirement, but if you want to keep some of it into retirement, then of course you don't make these choices on what to reduce it to until the retirement application. So if you pick no reduction, if you just want to keep FEGLI exactly the same into retirement, or FEGLI Basic rather, again, the price does pop up. Now there's a couple other options. There is what they call 50% reduction. 50% reduction. And what that does is the price does come down some. It's not quite 7 times, but it's still, there's premiums for the rest of your life. And you only get half the coverage, so half your base pay. Now, there's one option that is by far the most popular. It's called 75% reduction. And this is how it works. Let me explain. If you elect 75% reduction for FEGLI Basic, let's say you retire at age 60 years old. Between age 60 and 65, you pay the same premiums that you did while working, which for most people are pretty reasonable. They're pretty reasonable. Again, it doesn't go up as you age. So for most people, it's reasonable pricing. Let's say it's $20 a pay period or whatever it comes out to, okay? And after 65, 2 things happen. Number one, 65 plus, the premiums go away. It becomes free for the rest of your life. Now, the coverage does start changing after 65. Let's say your salary was $100,000 while you were working. Again, for these before 65 in retirement, you'd still have the full $100,000 worth of coverage, and you'd pay the normal price. 65 plus, however, the coverage drops by 75%. It slowly does it over time. But in this example, you'd be left with $25,000 worth of coverage. Now, if your salary is higher or lower, the coverage amount would be smaller or lower, or bigger or smaller. Because again, it's 25% is what you're left with, whatever your salary was, your base pay before. But it is free for the rest of your life at that point. So the coverage amount goes down, the payout amount goes down, but the premiums go down to 0. So especially if you're close to 65 when you retire, this can often be a no-brainer because you just pay a little bit more into the system to get thousands of dollars of coverage for the rest of your life for free. So this option is by far the most common into retirement. Again, it's called 75% reduction, and you get some coverage for free after 65. So that is my summary of these different types of FEGLI that you have through the government. There's different options, basic A, B, and C. First, check what you have. Figure out how much do you need and where is the best place to get it, whether it's through the government with one of these programs or is it somewhere else. Shop around, and please don't cancel your life insurance until you've already secured the one that you need to have. I've seen too many horror stories of people canceling FEGLI, assuming they're healthy enough to get covered out elsewhere, and they didn't realize they had some blood work problem or whatever. Something came up. So make sure you're wise when you make these sort of decisions. Make sure you're confident, but this is how the program works. So hopefully this helps you get the most out of this and know when the prices are going to jump up for you. So that is FEGLI. That is FEGLI. I hope this is helpful. If you're looking for help with your federal benefits and maximizing your TSP and taxes and everything in retirement, check out the description. We help feds with this sort of thing all the time, and we're here for you if you're looking for help. Have a great day. We'll see you in the next video.